Hi, and welcome back to the Daniela Camboneovou show here on ITM Trading. Today, we are diving deep into one of the most electrifying stories in the precious metal space. Silver's dynamic run that's already shattered records and shows no signs of slowing down. Joining me today is the legendary market technician, Michael Oliver, founder of Momentum Structural Analysis, with over 4 decades of experience, and he famously called the 1987 crash. Michael pioneered a momentum-based approach that spots major structural breakouts long before price charts catch up. He's been pounding the table on silver's historic acceleration, warning of an upside explosion that could shock investors and redefine the markets for years to come. I'm thrilled to have Michael on the show today. Michael, nice to meet you and welcome.
Great time to be here, Daniela.
I mean, as we're speaking, I feel history, we are living a historic moment. Gold is marching towards $5,000, silver $94, like I said, as we're speaking today. What do you make of this? Can I call it a run-up in precious metals here, Michael?
It is not a normal bull market. We've been telling our subscribers that for well over a year. But it's gone up in an arm wrestling manner, both gold and silver. You know, they shoot up a couple $100 in gold or $10 in silver, and then you go sideways for 5 months and bore the heck out of everybody, make people think it's over. Then you do it again, and then there's another congestion zone. And it's been laborious. It's no longer laborious. It's going to go vertical. There probably will be, I think, a correction in this process. But our technical work coming at these markets from different angles, by the way, not just looking at the price and the momentum of price, but at the spread relationship between silver and gold. You know, the baby metal mama currency and the big old mama currency. And silver's vastly undervalued, historically speaking, to its prior relationships to gold. And I think that's going to change dramatically and suddenly. And that's the key word, sudden. I think we're in one of these, what we call a move to new reality. It's occurred in other markets. We found an instance of it occurred in copper back in 2005 to 6, where copper, in a matter of a couple quarters, quadrupled in price on its own, without help from any other market, and went from an old, multi-decade horizontal reality and just said, boom, I'm out of here. And quadrupled, you know, a new reality.
Yep.
Lead did that in 2007, which was ridiculous. But, you know, it did. How come silver has still been caught in that half-century $50 to $4, $50 to $4 range, and only recently has broken out?
Thank you. That's the question, yes.
I think it's going to a new reality, and our measurements, based on a variety of factors, not just looking at silver itself, is that this move is going to take us to a new reality. And much of it is going to occur in a few quarters. And we begin that clock. In other words, where did the couple quarters begin? We begin it at the November close. And the reason is, it was at that point in time that when we looked at the relationship of silver price to gold and plotted it as a spread, you know, ounce of silver into an ounce of gold, it's a certain percent. Okay, you just simply plot that chart, and it was a ceiling that went back years, quite a few handful of years, where you go up and bump a certain level and bump a certain, silver just couldn't get above that value of gold. It broke through there in November. We've gone back and found other few instances of this type of behavior where silver said, I'm out of here, okay, versus mama gold. And it went vertical for a couple of quarters after that. This time, there's other factors in play as well, fundamental, macro, technicals, and so forth. But we've been arguing since November that what we're about to see in the next handful of months or so, you know, 5, 6, 7 months or so after that November breakout, therefore starting in December, a vertical move in silver that's likely to take your breath away. Not just to go up to 90 or 100, but go into a couple hundred, possibly 300 to 500. There's some rationale for that, by the way. Various angles of analysis give us that conclusion. And we think a lot of that's going to occur by the second quarter of this year. Obviously, that's not going to occur in isolation. Gold's also going up. And I think gold at 5,000, for example, which is headed for now probably, is way low. To give you an example, stupid one, but I've put it out before. People think that's his target. It's not. If you go back and look at the bull market from 1976 to 1980, it was an eightfold gain in gold. 8 times. Okay. But look at 2001 to 2011, eightfold move from the prior bear low to the bull market high. Our bear market low was 1,050 in December 2015. Eightfold is what? Okay, 8,000 plus. That's just to do what gold has already done twice in the last 50 years under far less dramatic fundamental conditions. Eightfold. Right now we're only a little past fourfold. What if gold goes to 8,000 again? And silver goes up, breaks out versus gold, which it's done, and goes up to, 3%, 6%. Those are numbers it was at in 2011 when gold had that bull market run up into 2011, which was the second hit up at 50. Silver spread then was 3.1% of the price of gold. Right now we're just 2%. In 1980, when it had that surge to $50 for the first time, it was 6.5% of the price of an ounce of gold. Wow. Consider those numbers, okay?
Wow, indeed.
We'll jump right back to the interview, but this is too important to skip. The real risk today isn't just a market crash or recession, it's the US dollar being reset, revalued, and losing all purchasing power. Prices keep rising, incomes can't keep up, and central banks around the world are buying record levels of gold because they see what's coming. You can't fix the system, but you can step out of the line of fire and position yourself the same way they do, like a central bank, not a common investor. That's why we built the Private Wealth Playbook. It's free and it shows you exactly how to protect your wealth, privacy, and retirement through whatever comes next. So click below or go to DannyReport.com and secure what's rightfully yours.
Michael, I want to dig a little deeper on that rationale that you said, that why silver has, broken free or revealed its true price, or like you said, finally broken from that range of $50 to $40 that we've all lived. What do you think happened? Is it the China story? Is it that it can no longer be manipulated as some have suggested? What are your insights on this?
All the above, but the bigger picture, I think, really is the one people don't talk about, and that is we're headed for a monetary crisis. I think fiat currencies are in jeopardy. We know, if you haven't been paying attention, and I'm sure you have, and your audience as well, the T-bond market is on an ambulance stretcher right now, okay? Not just our bonds, the Japanese bonds effectively crashed today, exploded in yield. UK bonds don't look very good. The Western world bonds don't look good. We're no longer talking about a mortgage crisis like 2007 to 8, where this mom and pop lost their home, et cetera, et cetera. We're talking about government debt, markets that dwarf the stock markets. And if you'll look at the T-bond futures, which is what we analyze, 30-year bond futures in the U.S., they crashed between 2020 to 2022 in price. Yields exploded, okay? That price low back in October of 2022 was at 117 on T-bond futures, okay? Just remember that. In the subsequent 3 years, there have been rally attempt after rally attempt. In fact, 3 of them. The 3 is usually all you get to get up out of the hole. Fed can cut rates all they want on the short end, but it doesn't affect the long end rates. And they failed each time. Right now, we're down in the 114s, even traded into the 113s today. Our technical analysis tells us that 3-year process of trying to base or trying to top yields is failing. And then you roll over about another 3 points or so in the bonds below today's low, which when you look at a price chart, that doesn't break below the lows we've seen over the last year or two. But you do that and you could be headed into a bond panic. Well, you can't have a U.S. debt market panic. That's like a nuclear event. The Fed knows that. They're the printers. And they print gold higher because they destroy their own money in the process of printing. In November, the president of the New York Fed, Williams, said in a speech or press conference, the Fed is now going to start buying bonds. And his excuse was, just to provide more liquidity in that market.
Mm-hmm. Mm-hmm.
You look at what's going on in bonds since he said that statement, slab down, sideways, dead as heck for 2 months, couldn't move. It's like it didn't even look like the bond market anymore. The daily, weekly ranges were like nothing. Comatose, meaning they were buying it, but the rallies couldn't get going. And then now you've punched through that recent set of lows. If they're not in control of that beast, and I don't think they are, that can cause wave effects in other financial markets that will cause central banks, not just Japan, here, UK, all across the Western world, to go ape. And that's what drives monetary metal.
Well, and we're about to get a new Fed head, but if I'm hearing you correctly, it doesn't matter because they can no longer manipulate the beast.
He'll print too. Our president wants him to print. So you've got both the president and a Fed that's going to print. Well, you think, that's good. They're going to put out the fire. No, they're not. They're just going to create more M2 money growth. Go to the St. Louis Fed website and ask for M2 and sit back and look at that money supply growth.
And explain to the people when that goes through the roof, Michael.
Well, that's what gold is the other side of. It's real money. They can't inflate it. They can't manipulate it. They tried to manipulate silver by keeping a lid on it. And usually when somebody tries to manipulate a market, whether there's some big trader or government, and they're doing the wrong thing, and it seems to succeed for a long time, all they're doing is creating compression. So that when it finally does break through their barrier, attempted barrier, it goes even more ape on the upside than it might otherwise, because it's been held back for too long. And so it has a panic on the upside. And that's what I think we're starting to see in silver, especially silver and in gold.
This was a good article I read with the headline, "This is a sell America. US dollar, treasury prices tumble, and gold spikes as globe flees US assets." The sell America trade is in full effect, Michael?
Yeah. I know everybody's going to want to blame it on Trump, but frankly, the underlying fundamentals that are decrepit and have been bad for decades is the ongoing inflation in the money units. No, we're not the Weimar Republic, but in effect, we're doing the same thing in a miniature form. You print, prices of everything goes up, bread, stock market, some things go up more, gold. If you own gold for the last 10 years, you beat the heck out of the S&P. But it's all false. It's distortions. And you can't keep playing that game because finally you'll have an accident. Not really an accident, but a consequence, like in the government bond markets, that is so huge that it causes intellectual doubt among academicians, among the voting public who thought some things were going to happen on a good way after Trump got elected, but they're going the other way. Mm-hmm. Apparently, neither party works. So when nothing works and your retirement account suddenly, let's say, in the next couple months on the S&P wipes out all of 2015's gains, which is only 15%, then suddenly you as a person in the street, what the heck? It's 52 card pickup. You are uncertain. Therefore, what happens? Emotion. And when emotion comes in, whoa. That's when
panic.
It's like a nuclear event almost. And it can be very personal to people, just like it was in 2008 and 9, except this time it's even bigger. Gold knows that. That's what's been driving it all along. This is coming.
Do you feel enough people are waking up to the reality that if they don't own gold...
No, they will. They're not waking up yet, especially in this part of the world. right now, if I don't look at internet comments on silver, my son does that for me. I'm tired of looking at that kind of stuff. But the jabber from free analysts on the internet is sell silver, short it. It's the top. It can't go any further.
Right.
This is what they're doing is they're looking at an arithmetic chart, a dollar chart of silver. And admittedly, when you look at it, it was like, 40, $50 a handful of months ago, and it's doubled. Okay. So in a normal world, you'd say, well, that's pretty good. I'm getting out. We're arguing it's just begun.
Well, that's wait. I don't want to interrupt you, but that's a good point because I just did a webinar with Frank Juster and Rick Rule, and that was a question that kept coming up. Of I want to sell my silver or whatever silver that I have been collecting in my desk over all these years and putting it all into gold.
I know, there'll be a point. This is something we do for our subscribers, aside from trying to get their attention off the day-to-day swings in silver. We've been telling them for months. If you see a 10 to 15% drop and it looks like hell on a daily chart, buy it anyway. And if you go back over the last handful of months and every time you see a 15 or 8%, 10% drop, if you bought it instead of selling it, you're way ahead of the game, okay? Somebody knows that because somebody's buying it, not just somebody, but bodies. But you still have this overwhelming doubt. And here's an analysis I gave my son this morning. I noticed that before silver would hit a higher gold, even like back in April, and gold went sideways for 5 months. Doubters. It didn't break down, but they capped it. And then you broke through, and then in October, you had another pause. The pause was only then a couple months, shorter time span, and then you jolted again. Same thing's going on in silver. You could have a whole year-wide pause at $35, late 2024 through early 2025, but basically a whole year of this with a 35-plus cap. Whole wasted year. You bored to death, okay? Doubted. And then it went through that and jolted up another $10 or so. It's been a layered process. But I even noticed that on day-to-day action. Take today, for example. We jolted up to $95. And they spend the whole day selling against that and dropping it back down to 93.
Right. Yeah.
Except instead of it lasting 3 months now or 2 weeks now you can measure those pullbacks in hours. So things are speeding up. I suspect the T-bond event, and we've expected this all along, is possibly the event that creates the headline crisis. And if it does, we've, in our analysis of some prior surging moves in silver, for example, in 79 to 80, where it went up like 5-fold in 5 months. September 2010, April 2011, up double and a half in 7 months. In the middle of each of those explosions, and we're in a bigger one now, but in the middle of that clock, there was what you could call a stumble or a correction. For instance, in January 2011, in the $20 plus range, you had a monthly reversal in silver where it made a high and it closed down on the month. So price chart technicians would say, oh, that's a reversal month. You turned around the next month, it blew the lid off of it again, even more than you'd done. But you had a midpoint stumble. If this T-bond event continues for another day or two, you're going to panic the Fed in a way you've not seen before.
Wow, you're talking about an imminent event here.
Yes, imminent.
You're talking days. Okay.
Which get us maybe to that midpoint in this 6-month swing in silver. Like get us into February, let's say, maybe, but with headlines. And you could, here's the thought that I've put out there. The Supreme Court is going to decide on tariffs. Most people don't know which way they're going to go. I have a strong suspicion they're going to say no. And that they are seeing this broader than just a legal case about tariffs and how they read the Constitution or whatever. They know that what's going on in the world now, especially today, for example, where you read that headline, that sell all U.S., they could step in and put their foot through that door and maybe stop the tariffs and therefore, quote, save the world, if you know what I mean, by stopping the panic selling of U.S. assets, by cutting off his tariffs against Europe, for example. If that were to happen, but a panic first, okay, T-bond, Don't be shocked if silver goes vertical for several days. Like maybe it doesn't pause till it's 120, 130 bucks. And maybe has a couple limit up days, 10% per day on the COMEX. There could be a point in there where if they decide that way, and it's got to be days away or a week away, Supreme Court decision, but I can't find specificity on that.
Right.
You look on the internet, you won't find it either. We
I'm
know.
Googling right now.
Yeah. And that could try to temporarily put a hose effect on this fire. It won't ultimately stop it because there's far bigger things underway here. But that could be one of those events where silver goes berserk prior to that. Stock market gets gut kicked another day or two like it's doing today. And the T-bonds move into what could be called a panic sell-off. At that point, suddenly the non-owners of silver or the shorters of silver think, uh-oh, I've been on the wrong side. I've not been long, or what the heck am I selling this for? I got limited up today. I can't get out of my shorts. We could be headed for that kind of speedy process. Literally, at the time of this interview,
What you mentioned before, so within the next 6 months, you wouldn't be surprised if silver could possibly hit anywhere between $300 and $500 an ounce?
Yeah, with a jiggle. No doubt
With the jiggle,
there
right.
will be a jiggle in the middle that will scare the heck out of people, even the ardent silver bulls.
And gold would be way north of 5,000 at that point.
Yeah, I think, what if, for example, gold hit 8,000 and did its, quote, normal eightfold move? It's done it twice prior to bull markets or
Yes.
eightfold. Or do it again.
Yeah.
That's not exceptional. That's just doing it again. Okay. And it goes to 8,000 and silver goes back to its spread relationship of gold would have had in 2011 where we were 50 bucks. It's 3.1% the price of gold. Well, what's 3% of 8,000? Pretty nice number. But when you factor in also Eric Sprada, a friend of mine, you know who he is.
Yes, of course.
He's been making the argument in speeches that, if you take the money supply and factor that into the price of silver where it was in 1980, and notice the money supply growth since then, or 2011, and note where the money supply growth has been since then, what percent gain, then, add that to those two highs and you come up with numbers well up in the couple $100 just to match the real buying power of silver at those two peaks.
One last point before we wrap, because this is the most important of them all. And we were talking offline about this, how all this is a distraction. And I hope more people are waking up to the reality that the money that they have in the bank, the cash, your US dollar bills, Canadian dollar bills, whatever you're holding is dying every day. Your purchasing power is dying. Do you feel that more and more people are understanding this, Michael?
No, they're seeing the effects, the consumer price effects. And I think on oil, we analyze it closely, and commodity complex. As far as we're concerned, the commodities are starting their next bull leg, much like that 2020 to 2022 doubling in the price of the Bloomberg. I think we're going to start another one. Oil's the laggard. And it's the one where President Trump said, I'm going to keep gas prices down. Right now, our technical analysis of oil, forget all the headlines, because the headlines are, all the fundamentalists say we're going to 40. Fine, I love that. They'll get ambushed. The technical suggests about a handful of dollars above where you're trading, less than a handful of dollars above where you're trading right now as we speak, which is back above 60. You're going to trigger some technicals that could violently move oil up out of this 60, 70 range, and probably on the first thrust get us into the 90s. A 50% increase from recent prices. That would jolt, again, the average Joe when he pumps that gas and sees the clicking. Even then, that's how he sees inflation. He doesn't see it with the money growth. He really should, because every decade, about an 80% increase to 90% increase in the money supply. So like when your granddad built the house, it was $4,500. When your dad built one, it was $45,000. Median home now is $450,000. What's going on? Decay in the money in it. Over, one very long human lifetime.
Exactly.
And that awareness, people don't look at that factor. They look at CPI and stuff like that. But that will be impacted, of course, by increasing the money supply. So when they print more to save the bonds, gold will go berserk because it's real money. Half the world already realizes that and is starting to shift to maybe going to gold again. And the Western world, which is a laggard on that issue, might, if they get into a crisis, finally say, hey, this hasn't been working. Maybe we should go back to gold,
Or they're going to look at stable coins.
No opinion on that. We have a negative view on Bitcoin. I know that. We were negative months ago before it had its recent crash, and I think it's going at least to 60,000, probably, sometime in the first half of this year. That would be a total wipeout for anybody in Bitcoin over the last handful of years. I mean, you were 127,000. They're going to cut you more than in half. And I think any talk of at least crypto being an alternative money unit will go out the door. And already it's starting to. Where the crypto people are starting to recognize, look at gold.
Look at gold. Michael Oliver, this was a fascinating discussion. I'm so glad we connected and made this happen. Please come back soon. We're gonna keep tracking this.
Thank you, Daniela, and you're gonna have an exciting year.
Yeah,
you're gonna have an exciting year.
I think so. Where can folks find more of your work, Michael?
Oliver MSA from Momentum Structural Analysis. We examine all 4 major asset categories: bonds, stock markets, commodities in general, monetary metals, and foreign exchange. Ask for some samples, and
There
Anyway,
you go. It
thank
was
you,
a
Daniela.
pleasure. And as always, I invite everyone watching, if you haven't already, if you haven't owned gold or silver, you got to catch up here. And if you already own some, maybe you need to add some and reach out to my colleagues at ITM Trading. It's a free strategy session. And we will see you all soon. It's exciting times. Stay tuned.